Hello everyone, this video is being recorded on the early afternoon of Friday, May 24th, 2024. Hope you all had a great week. Not so much for precious metals. It was a rough week, considering we have bearish reversals in the sector, most notably in gold. Looking at the numbers, gold lost about 3% on the week. Silver, 2.5%. The stocks, the minor ETFs, 3 to 4% on the week. So looking at those numbers, you could say that silver in the stocks held up somewhat well, considering gold lost 3% on the week. So you do have a gold or a bearish reversal in the weekly gold chart, I should say. But enough of me blabbing. Let's get into the charts. So here we have the daily candle charts for gold here at the top, silver here in the middle. Then we have the gold-silver ratio at the bottom. Remember, big trend line break in favor of silver, but if we're going to see more corrective action, this came down to 75, the first downside target, so this could rally or go like that for a little while. But in looking at silver, I'm looking for this support level to be tested right around 28.5, 29. This, I know some people think it could come all the way back and test 26. I'm not sure about this. I see that as a low probability, especially because this was a really strong move like this. So I think this is going to come back. I think it's most likely around here in 29. You could maybe, you could also put a support line here right around 27.5. To me, that would probably be the worst case for silver, the worst case scenario. So again, I'm looking for this level to be tested in silver. Now, with respect to gold, you have the 50-day here, 100-day here, 150-day. The reason for those three moving averages is historically, if you look at the bull markets in gold and when it's running, and you look at these daily support levels, it tends to find a bottom at the 50-day when it's really hot. Otherwise, it's the 100-day or the 150-day. So looks to me like we're probably going to see more of a correction here. So I doubt it's going to bottom right here. So here's the 100-day. This is coming up here. Probably is going to hit 2250 next month, and here's the 150-day, which will come up like this. So keeping those in mind, looking laterally, this level here still looks really good for a test, right at 2250, call it 2245. You have an open gap here. The next level would be this, right at 2200. You do have this open gap here. So that to me is what I'm looking at. You have this level here, then you have here, which is that open gap, right? Again, 2245. I think, well, my guess would be, I think this is when you're going to see the bottom right here. And maybe that intersects with the 100-day, something like that. Or it could even be the 150-day. They could get close together somewhere around here. In Elliott wave terms, my buddy Ryan Parker told me he thinks this could be an irregular flat. Now, in Elliott wave terms, you tend to get an A, B, C like that. That's how the correction works. The most bullish ones when you have A, B, C like that, except this is called an irregular flat, where the B wave actually makes a new high, even though it's a false new high, and then the C wave comes down below here. So that's the A wave, that's the B wave, and then the C wave could come down here. That's your irregular flat, A, B, C down, Elliott wave correction. So I just wanted to throw that in there, but again, I'm babbling on here, but this is the level that I'm going to be looking at, 2245, 2250. Now, looking at the weekly chart, yes, this looks ugly here. This looks like a double top, but this is another case where you really need to understand what goes into these patterns. Like a double top or a double bottom, though, like a double top, that's a top after a really long uptrend for a long time. It's not, you don't see a breakout from a 13-year pattern, you go up like that, whoop, that's a double top. It could be a double top in a couple weeks sense here, but this is not something to worry about beyond the next couple weeks or so, in my opinion. So looking at the weekly chart, this shows those two support levels. You have the open gap here right below 2250, and then you have 2200. Same thing for silver, where you can see 28.29. That's the level that I would expect to be tested. The candle here, this is not that ugly. Based on the candles, I would be more concerned with this because it looks like a double top. And again, it could be for a month or so. This is a bearish reversal as well, but not as ugly as a double top, in my opinion. But we're getting into the weeds here. So you know the support levels to focus on for gold and silver. I already said them 2 or 3 times, so I don't want to talk your ear off. Now let's wrap this up and talk about the stocks. So I'm not a huge Elliott wave guy on the stocks, but what's really interesting is across the board here, you see 5 waves up. You see 1, 2, 3, 4, 5. It's the same for all these. Again, 1 wave, 2 wave here, 3, 4, 5. So a clear 5 waves up. Now when you have 5 waves up, you're in a bull market. The next correction tends to bottom, or it has to bottom above the previous 4th wave. So that was the 3rd, 4th, 5th. So this level here on all these charts, this blue line, look for the next low in miners to come near but above this line. One more point about miners is they have been holding up. I don't want to say outperform, but they've been trading fairly well relative to the metals. So it's a good sign. I mean, you had gold down 3% this week. And again, the minor ETFs, looking at my number, they weren't, they were down 3 or 4% on the week. I mean, if you have gold down 3% on the week, the minor ETFs should be down 6, 7, 8% on the week. So I still think the miners are holding up really well, just in general. And there's not a lot more for me to say here based on these charts. Again, look for the next low to come above this line here for GDX 40 and for Silge here. So we'll see what happens next week, but we're probably in correction mode for a little while. Nothing to really worry about. It's healthy. And with respect to the miners, the good thing about a correction here and now is when you're looking at the high quality juniors that I like to focus on, they've performed really well in the last couple months. I mean, these stocks are up a lot, and they're starting to get a little expensive for newcomers to the sector. So the fact that we could have more of a correction now, that's a good thing for the new people coming into the market. You get more of a correction in the miners here, you're going to be able to feel a lot better about buying these high quality juniors. You're not going to have to chase them. And if you bought it in recent weeks, just buy and hold if they're quality companies. You don't worry about it. Don't complicate it. We'll be here to help manage everything and analyze everything as things progress. So looks like we're in correction mode now. Nothing to worry about. Thank you so much for tuning in. Leave a comment on the video, and I'll talk to you guys again next week. Have a great weekend.